For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn, people. Because you're tuned to the Ozarks' #1 show about your money. Randy Floyd, founder of Floyd Financial Group, will be your guide for straight talk about living the life you deserve in retirement. Prepare to be empowered. Now, here's your Show Me the Money host, Randy Floyd.
Good morning and welcome to Show Me the Money with Randy and Jake Floyd, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. My name is Jeff Shade, and as always, I'm just here to ask the questions. But the words of wisdom and solid advice come from Randy and Jake Floyd of Floyd Financial Group. First off, Randy, how you doing today?
Doing very well, Jeff. How about you?
I'm doing fantastic. And Jake, how's this Saturday morning treating you?
You know, I'm trying to figure out how I'm going to come up with $3,500 for one of these fancy new Apple VR headsets.
Yeah. That is what we call a first world problem. Is that it?
It's definitely a first world problem. I was watching the Apple reveal. So they do their online deal where everybody can watch. So they have like a certain amount of live audience. It's maybe 1,000 people, something like that, in Cupertino.
Yeah.
At their developer conference, they have like booths set up so people can try a version of it and that kind of thing. But it's mainly a software get together for the Worldwide Developers Conference at WWDC is what it's called. But I was watching that, and as they brought up the VR headset and they were telling all the features of it and all that, and then they brought it up, and everybody knows Apple's format because they were about to announce the price, and they said for $34.99. Everybody goes,
suck the air out of the room.
Well, there was a lot of analysts expecting it to be maybe $2,000, and everybody's like, surely it won't be that expensive. You know,
well, for a family of 5, you'd have to take out a second mortgage on your house.
Oh my gosh, yeah. I mean, they created a vacuum in that room when they announced that price of $34.99. Call it $3,500. I don't know.
Of course, you know, in the world we live in, who knows? We may be going out for a nice dinner to Char or somewhere, and you'll probably see a couple of people with their headsets on sitting across the table from each other.
I can't wait to see that. We were talking off the air about how disturbing it is to see people who go out and, you know, it's supposed to be a social thing to have dinner and they're on their phones. They're not even communicating with each other. I mean, that is terrible.
I mean, I don't know that they would notice if they had the headset on or not. You know?
That is odd. Well, anyway, there's a lot to talk about, and I want to discuss how people are planning to pay for that VR headset. But let's start off with some of the things that are happening in current events. I mean, I understand we've got more jobs, but more unemployment. What's that mean?
Yeah, so last week, or it's been about, I guess, 8 or 9 days ago, we had a couple of jobs reports on Jobs Friday and all that. But what's interesting is for a long time now, for, you know, over 18 months, we've been having this situation where we have very few unemployed, very few people filing continuing unemployment claims, and more jobs being created. And so we've talked about a lot on this show that is really the driver for inflation. Mm-hmm. If I have lots and lots of jobs needed and nobody to fill them, the only logical thing to do is to offer more money, right?
Right.
So if everybody's making more money, that simply is going to push the price of things up. If we raise the minimum wage to $20 an hour, that doesn't really fix the problem. And I know that's a fairly controversial thing to say, but you know, if we raise the minimum wage, the people working at McDonald's to $20 an hour.
Wow.
All that's going to happen is the price of the burgers are going to have to go up to compensate for that.
Right.
And so that's where you get inflation. And so we're now seeing where we're still creating more jobs, but we're starting to see more unemployed at the same time, which creates an even bigger gap between the amount of people looking for work and then the jobs that are actually available. So it's really going to put a lot of pressure on the Fed looking forward to maybe not stop raising rates yet. I know a few weeks ago we were thinking that they may pause here, and they may, but it's going to be hard to pause when all the pressures you've been working against are really speeding back up where we had them on the run going down.
Well, I think the other thing, too, to point out here, Jake, is, you know, what's been said, and we've been seeing in the headlines for the past couple of months, that people are now using AI and remote work to have 3 and 4 jobs at one time that they're doing. Mm-hmm. So this is how we could actually have that, where more jobs are created and unemployment goes up.
But right now, though, we're seeing the opposite. Right now, I mean, I agree. I think AI could be a solution for inflation over the medium term, but because we would see those numbers show up in the available jobs numbers if somebody was doing 3 or 4 jobs at the same time. And I know there are people out there using ChatGPT to do 3 or 4 times the amount of work that they could normally do, and especially customer service type jobs, or like copywriters, for example, writing papers, things like that. So it's because, I mean, I could pay $2,000 to have somebody write me a paper on XYZ research or something, or I can go to ChatGPT for free 99, as I like to say.
Right.
But for nothing. And you go in there and you say, hey, write me an article on this, reference this article, and look forward and give the likely results of the future. And it'll spit it out in about 2 minutes, and then you're done, and it costs you nothing. So there's people leveraging that to do more work, get paid more money, but we're really not seeing enough of that yet to counteract the jobs numbers. So right now it's still looking like we may see a little bit of a return of more inflation instead of it going down the way it has been.
Right. Well, the IMF, they were thinking they were going to leave rates, but they just raised a quarter point. So that was something that they did not expect over there. The other thing I would say is, we get the numbers on the CPI, the PPI, the GDP, and all that. And what we're noticing still is we're having a slight decrease in productivity for the people that are working still today, even with, AI and all those things that we're seeing.
Yeah, and you piqued my interest a couple of weeks ago because I didn't know about ChatGPT. I think that's what you call it. And I went on it and I just did that. I did exactly what you said. I told it, write me a 2,000-word article on retirement planning in today's volatile economy. And it came up with a 2,000-word article. It was reasonably good, and it spit it out in about 30 seconds.
Yeah, and you have to be a little careful because it's definitely not perfect.
No.
And as some attorneys around the countryside are figuring out, so there were some attorneys that used it to write briefs for actual cases.
Right.
And it cited improper cases or cases that didn't exist inside the brief, and they didn't check it, and they turned it in. So now they're in hot water for sure. I don't know exactly what's going to happen there, but it's definitely going to be interesting to see how all this unfolds. So yeah, definitely don't just assume it's right yet.
Right.
It is a little bit scary using it, how easy it is, and how it just kind of takes over for you after you do the input.
Yeah, it was kind of fun to play with, but as you said, it isn't entirely accurate, and some of the things I ask it to write, too, really just skimmed the surface of what I really wanted. We're talking with Randy and Jake Floyd here about current events. We're talking about jobs, hiring last month. Hiring surged last month. U.S. employers added about 339,000 jobs. The jobs report, Randy and Jake, is one of several factors that the Fed will need to consider when it decides whether to continue raising interest rates when policymakers meet next month. Besides the jobs report, is there anything else that they would consider when it comes to figuring out if they want to raise these interest rates yet again?
So they're going to watch the CPI and PPI numbers. So CPI is Consumer Price Index, PPI is Producer Price Index. So a lot of the Producer Price Index goes into the CPI. And so if they watch those numbers and they kind of watch the correlation and how those numbers were affected last month to this month, they're going to watch that coupled with the jobs environment. But I think really, as long as inflation does not get down to 2% and the prices are not coming down, they're going to keep their foot on the gas until something breaks. That's really, I think, what a lot of people are discounting is, I think it's less about how much they can raise and it's more about what they can get away with before they start to really put too much pressure on the banking system, lending. And I got to tell you, I think we're pretty close to a limit of how much certain sectors can take and a limit of how much risk banks are wanting to take because payments are getting higher and higher. People are more and more leveraged. I mean, now they have to go buy this Apple VR headset.
Yeah.
I mean, there's a lot of things to consider in life. And so when they are doing this, there's a lot of banks, they're going to hit their limit. They're going to say, you know what? I don't want to take any more risk. I'm going to start closing people's credit accounts, lowering their limits. And when that starts, it will gain steam and it'll start happening everywhere. And so I really think we're in the final throes of how much credit people have left.
Yeah, and that second mortgage to buy these VR headsets, used to be only 4%. Now it's 8%.
Oh, yeah.
9% on those home equity line of credits. So be careful out there.
Well, and a lot of people on the mortgage front, people only look at what the perfect credit score person pays.
Yeah,
and they say, mortgages are 7.2% or whatever. But the average person is paying a lot more than what the best mortgage rate is.
Yeah, in order to get get the best rate, I mean, you got to have an 850 FICO score, and if you're coming in at 600, you're not going to get that best rate.
Yeah, on mortgages, I think the high band is 770.
Okay.
So there's quite a few people that do have 770 credit scores, but
Right.
there's a lot of people, especially in the younger people, that are between 700 and 770, and there's quite a lot of difference in the rates and that kind of thing. And again, it's going to come down to the same thing, where the bank's appetite for risk is going to determine what those rates are. And at some point, the spreads, mean the difference between how much you're paying versus what your credit score is, will start to widen out, because banks will be like, hey, if you got good credit and you're not very leveraged, we're still willing to do this. But if you don't, we don't want it at any price.
Well, Randy, I think I've got the answer there for getting that second mortgage at 8% to buy that VR headset. Why don't I take the 5 credit cards that I have, and in total, the $3,500 in credit that I have left on those, and we'll just buy it with that, and we'll go ahead and finance that at something like 27%, because after all, we can't go on unless we have a VR headset. We're talking with Randy and Jake here at Floyd Financial Group. Let's try to squeeze this one in, gentlemen. Debt limit. I guess this was sort of a disaster deal. What's your opinion on that?
Yeah, so I just wanted to tell people kind of what we thought about the debt limit increase, because there was a lot of things said on both sides of the aisle and everything. And I mean, if we're going to call it like it really is, the Republicans basically just caved, or the majority of them did.
Rhinos, yeah.
Yeah, Jeff, basically what happened is they just caved to Biden, and I think the savings was around $12 billion, best people could say, on a $4 trillion number. So that's basically nothing. And the $12 billion, you have to count it a certain way to get there. So we really had an opportunity probably there to let it go a little bit longer and reduce some of the spending. I don't think anybody wanted to default, and I don't think we would have defaulted, but we rolled over pretty easy there. And we're not reducing the spending, and there's no end in sight, and the spending just keeps getting bigger and bigger. So at some point we are going to have to rein that in, and I was a little disappointed to see that we didn't rein it in a little bit more.
Well, since Congress finalized the debt limit deal, we're in the clear, right? Well, the Treasury Department's going to have to raise, Randy, roughly $1 trillion in the next 3 to 6 months by selling bonds to replenish its accounts and pay for the extraordinary measures it's been taking. So what does that mean for the economy?
Well, I think a couple of things, Jeff. Before we get to the economy, number one, we have to find people willing to spend $1 trillion now and invest it in the U.S. Now, do I think that's going to happen? I think, yes, it will. However, what people didn't realize, it's not just as simple as, hey, we're going to raise the debt ceiling and print money. No, we have to have people that are willing to invest so that we can have that money to pay bills with. So it's one of those things that actually has a lot more long-lasting ramification than most people would think as far as our government. And, we're going to have to offer a decent rate of return or nobody's going to buy those bonds either. So it just adds to our debt and adds to the fact that we have higher price debt that in the future sometime we're going to have to refinance. And that's going to put pressure on the economy all around. Again, it's just going to keep the price of funds and money. It's going to tighten up the supply from a lot of people. If they can buy a 5% bond or a 4% bond versus looking at the market, a lot of them will do that looking for safety, which will keep the market down, which will drive profits down on the market and drive us into the recession.
Well, there's no doubt that these are some volatile times that we're living in right now. Of course, we've been talking about current events with Randy and Jake Floyd at Floyd Financial Group. Maybe our listeners are wondering, well, how does this all apply to me? How does it apply to my ability to save for retirement, to plan for retirement in which I'm not only going to survive, but I want to thrive in? Well, I think the answer is to have a plan. And to get your plan at no cost and no obligation, all you've got to do is get in touch with Randy and Jake of Floyd Financial Group. Sit down and have a conversation about that. Get your answers. It'll help you on the road to retirement. To do that, call 417-889-7233. 417-889-7233 for your no cost, no obligation, no judgment financial review with Randy and Jake. You can also get it by going out to the website, which is FloydFinancialGroup.com. It's FloydFinancialGroup.com. You're listening to Show Me the Money. Thank you for joining us here this fine Saturday morning. We'll take a quick break. Be right back with more of our show right here on 104.1 KSGF, where Springfield comes to talk.
Hi, this is Randy Floyd, founder of Floyd Financial Group. If you're over 59 and a half and have the bulk of your savings in a 401k plan, you're going to want to hear this. We're big fans of 401k plans, but when you get close to retirement, they might not be the right investment for you. While they offer great tax advantages in your working years, they also come with big tax bills potentially when you start taking withdrawals. By nature, 401k plans are designed for a younger, more risk-tolerant workforce, not someone nearing retirement. That means if the market should take a tumble, your 401k plan might not have the kind of protection that you need. Here's the great news. If you're 59 and a half or older, you can likely move your current 401k plan to a more suitable investment without penalty. Call Floyd Financial Group today at 417-889-7233 to learn how, or you can request an appointment through floydfinancialgroup.com. That's floydfinancialgroup.com, or call 417-889-7233.
Advisory services offered through Floyd Financial Group, LLC. As the world and our country resets from the pandemic, new challenges are arising every day. Inflation, rising interest rates, volatility in the stock market, and geopolitical threats. While we can't control what happens in the world around us, we can control how we protect ourselves from what comes our way. Randy and Jake Floyd at Floyd Financial Group have built their business by helping people right here in Springfield defend their retirement plans so they can be prepared for times like these. This means having a strategy to combat inflation and minimize exposure to risk. The commitment to be a trusted partner and ally to the hundreds of families they serve through good times and bad is the philosophy that Floyd Financial Group has been built on. If you're anxious about the future of your wealth, your ability to combat inflation and exposure to risk, Floyd Financial Group is here to help you. For a no-cost, no-obligation, no-judgment financial review, call 417-889-7233 or request it online at floydfinancialgroup.com. Advisory services offered through Floyd Financial Group, LLC.
Ready for a heapin' helping of some more real talk? Thought so. Here's another serving of Show Me the Money with your server, Randy Floyd.
Welcome back to Show Me the Money. I'm Jake Floyd. In this segment, we're going to be talking about cryptocurrency and Coinbase and Binance getting sued.
Yeah, and I thought that we were done with cryptocurrency, at least talking about cryptocurrency, but it's raised its ugly head again. According to the headline, Jake, the SEC is suing Coinbase and accusing Coinbase of breaking market rules. What's this story all about?
Basically, what they're saying is that Coinbase and Binance and Ripple, who has the cryptocurrency XRP, they're accusing them of selling unregistered securities. And so if you look at the definition of a security, I think that's a pretty big stretch to make because these are clearly commodities, right? They're not currencies by definition. They're commodities. So they're similar to gold or copper or lumber or corn or those types of things. A security has to be, a security is like a stock or a mutual fund or something like that. And the argument that they're trying to make is that they're not registered with the SEC. The SEC wants to take purview. They want to pull this under their umbrella of things that they want to regulate. And it's kind of a power grab, really. So last week we saw Binance first get sued by the SEC, and other regulating bodies have been looking at them. And then we saw here in the States, Coinbase is another big cryptocurrency platform. And so as we look forward here, the outcome of these cases with the SEC are really going to determine who gets to regulate these currencies, but it's ultimately going to bring legitimacy to the industry, because right now it's kind of like the redheaded stepchild of investments, where you never quite know which ones are totally fake and which ones are here to stay. And there's thousands of these different currencies now, a lot of which have gone totally belly up or become near worthless, that kind of thing. I do think though that Bitcoin, Ether, and a couple of other ones are going to be here looking forward, because the platforms that they're built on, blockchain, is not going anywhere. And from a cybersecurity standpoint and from just a utilization standpoint, blockchain is definitely here to stay. And so if blockchain's here to stay, then that means Bitcoin and Ether and some of these other ones are also here to stay. So I really think the outcome of this, it's going to take a couple of years probably, but the outcome is going to be legitimacy of at least a handful of these cryptocurrencies.
So the entire cryptocurrency market, I guess, is in the red on this news, including declines of 5 and 10% in most of these tokens that you were talking about. I mean, crypto as a whole was really hit hard by this news.
Yeah, it was. And arguably the stocks were hit even harder. I think on like an hour after they said that they were going to sue Coinbase was down like 20% intraday, which is a couple of $1 billion in market cap or something. So, it's definitely a big deal. But I think what the outcome here will be is that the SEC and the court system will determine that the SEC probably does not have purview here, because it's more likely that they're going to be regulated either as a commodity or as a currency. Again, I don't think that it's a currency, but it's easier to make the case that it's a currency than it is to make the case that it is a security. But ultimately, the CTC that regulates commodities will likely get the nod at the end of this to regulate the cryptocurrencies. But once they are regulated, there's a lot of people that are terrified to jump into cryptocurrency because it's the Wild West, and it is.
Yeah.
I mean, we saw what happened with Mr. Big Brain Sam Bankman-Fried.
Yeah.
And, he was one of the most trusted guys, shook hands of presidents and world leaders all over the place. The Senate stood up for him, and then he was just stealing money underneath. I mean, so it is the Wild West right now. And once they start to get it regulated, though, I think the average person will be much more likely to invest, and it could potentially have another leg up once that happens.
So I want to interject one thing here, and I think this is important too. So what actually gives cryptocurrency, or in this case, let's talk about Bitcoin, what actually gives it its value? What do you think it is that gives it its value?
So I think the main thing that most people would say that are self-proclaimed Bitcoin maximalists, I think what they would say is the absolute finiteness of the amount of coins out there, or scarcity. So what gives gold its value in a lot of ways is, number one, it's kind of pretty to look at. It doesn't tarnish, but there's only so much of it out there. Gold is a fairly rare mineral. I mean, it's not as rare as a lot of people would have you believe, but it is difficult to mine and very expensive to mine, and so that's why gold has the value that it does. Similarly, Bitcoin is also very expensive to mine, and as time goes on, it becomes more and more and more expensive to mine. But there's only ever going to be 21 million Bitcoins ever.
And they lost some of those already,
They
right?
have lost a good portion of those.
They're in
There's
the couch cushion. Are you kidding?
in the cosmos.
Yeah. I mean, I can't see buying my wife, a pair of crypto earrings. I just don't quite get it. I mean,
Well,
it's made up
and-
of nothing, but you say there's a finite amount, and then you're talking about it's harder to mine. I can't imagine some guy covered with crypto going into a mine, but I don't know. It's just something that's just hard for me to wrap my brain around.
So to be perfectly clear, I am not a Bitcoin maximalist like
Right.
some of these people, right? I could take or leave Bitcoin. It's just my job to watch different types of
of course.
investments, different types
Of
of
course, yeah.
things, and watch kind of where there's money to be made and where there's not.
Right.
But I do think that the scarcity of Bitcoin is the part that really, there's a lot of these people that think it's the ultimate inflation hedge because there will never be any more of it. So if there's just more currency, then every Bitcoin then becomes worth more per Bitcoin.
So I think the other thing here is that has made it valuable, at least in the past, is the fact that you can do business and it's really not traceable. And so people with nefarious business operations...
Criminals, we call those.
Is that what it is? I was trying to be kind, but
Yeah.
not only that, and we see this today with all the cybersecurity problems we have. It's also a way to transfer money around the globe or wherever you want it to go, and people really can't hack it and take it. Is really what
Right,
it
and
gets
so
down
that's
to.
the blockchain technology underneath. It's it's very, very difficult to hack, and I won't get into all the nuances of that. But yes, I think it's relatively secure as long as you remember your password.
Yeah.
And so there's been several stories.
which-
There's one guy that had he had, at the height of the Bitcoin thing, he had. I'm trying to remember exactly how many Bitcoins it was. I don't remember off the top of my head, but it was about $640 million worth of Bitcoin, and he had forgotten his password.
Oh my God.
And so when you're holding Bitcoin direct, not at like a Coinbase or whatever, you don't have any password recovery option. And if you don't come up with the password after, I think in his case it was 8 or 10 tries, the account locks and it's gone forever.
Oh my gosh.
It's called burning cryptocurrency, or there's some other words for it, but basically you're destroying that currency because it's effectively gone forever, which makes it even more scarce. So that's what Randy was talking about earlier. There's 21 million Bitcoins, but I think depending on who you talk to, depending on how you calculate it, roughly 5 million of those Bitcoins have already been lost. And so it's going to be an ever declining amount of Bitcoin, which it just makes, those types of people even more excited that they own some.
So if the boomers and the greatest generation all go out and bought Bitcoin and they all lost their passwords, pretty soon there wouldn't be any Bitcoin. Then
right.
What's it worth?
That's right.
Well, it'd be worth quite a bit per coin. That's for sure.
I would imagine so.
You might have seen a few weeks ago, if you're on social media or on the news, that Bitcoin Pizza Day was trending.
Really?
And so I think it was in 2010, this guy got tired of waiting for Bitcoin to perform. This is very early on Bit Days. And so he called his pizza place and he said, I'm going to buy 2 pizzas for 10,000 Bitcoin. And so Bitcoin at the time was worth pennies a piece.
Yeah.
Anyway, so they agreed to do it. It was the first known Bitcoin transaction for actual purchase of goods. But it's also probably the most expensive pizza ever bought because of it. At today's value, it's worth about $250 million.
Wow.
And so you talk about hating your life.
Yeah. What's it worth to get it in 30 minutes or free? $250 million.
Yeah.
That's it. $250 million is a pretty steep price to pay for a couple of pizzas. But there's quite a few different stories like this where people had sold their Bitcoin. They bought it at a penny and they sold it at 13 cents each and thought they died and gone to heaven, And then later it went to 65,000 a coin or a little over. But it is an interesting phenomenon, I agree. And there's a lot of people that say it's very nebulous and that, I don't see how it can have value. But you have to understand that all the things that we think have value only have value because we've decided that they do, including the $100 bill in your wallet, right? Or the gold necklace you have on, or a priceless piece of art, right? The values of those things are only what we decide that they are, or what the highest bidder is willing to pay. And so the same is true of Bitcoin, and it is finite, and there can't ever be any more. But I think another thing that people like about it is that it cannot be manipulated because, and some people may know this, some people may not know this, nobody actually knows who created Bitcoin. They've given the person who did it a moniker of Satoshi Nakamoto that a lot of people, they credit him or her, but it's just kind of a placeholder. It's like Spider-Man. Nobody really knows who he is, But,
Yep.
He created Bitcoin and it's irrevocable. It can't be changed. It can't be revoked. It can't ever create more. And so that's what a lot of the Bitcoin people really like about it is it's maybe the ultimate anti-Fed statement.
We've been talking with Randy and Jake Floyd of Floyd Financial Group discussing cryptocurrency in the news these days and what the future of that may be. If you'd like to talk with Randy and Jake about your individual investing situation, see how well you are on the road to retirement, get a retirement plan in which you not only survive, but you also thrive, call Randy and Jake and get your no-cost, no-obligation financial review to put yourself on the road to retirement. To get yours, 417-889-7233. No cost, no obligation for this plan. Once again, it's 417-889-7233. You can also request your no cost, no obligation, no judgment retirement roadmap plan with Randy and Jake by going out to the website FloydFinancialGroup.com. It's FloydFinancialGroup.com. Time for a break. Randy and Jake will come right back with more of Show Me the Money right here on 104.1 KSGF, where Springfield comes to talk.
Hi, this is Randy Floyd from Floyd Financial Group. At Floyd Financial Group, we pursue excellence in the delivery of wealth and comprehensive retirement planning. We help you develop a plan to achieve specific outcomes so that you can use your life savings to make an impact you desire. We speak your language so you can clearly understand all the components of your plan. Here at Floyd Financial Group, our client relationships are at the core of everything we do. We cherish the relationships we've built with our clients over the past years, and we have earned their trust and confidence in our retirement process. Retirement should be more than about just money. It should be about the people and things that are most important to you. If you'd like to meet with us to discuss your life goals and financial opportunities, schedule a free financial review with no obligations. Our number is 417-889-7233. That's 417-889-7233, or visit us online at FloydFinancialGroup.com. That's FloydFinancialGroup.com.
Advisory services offered through Floyd Financial Group, LLC. Do you know who your financial advisor is really working for? It may not be you. Do you know if they're a fiduciary? Randy Floyd of Floyd Financial Group is a registered investment advisor, and his firm is proud to be fiduciaries, which means they're legally bound to serve you and your best interests above their own. Advisors working for retail banks are held to a suitability standard, meaning their first legal obligation is to protect the banks they work for, and maybe not you. At Floyd Financial Group, now more than ever, they're concerned about protecting your savings rather than taking more risk than you'd like to take in the stock market. At Floyd Financial Group, as fiduciaries, they're committed to your future and overall financial well-being, not to shareholders. If you're not sure who your financial advisor is working for, call Floyd Financial Group today at 417-889-7233 to schedule a no-obligation complimentary review of your financial plan. Find out more about the firm at FloydFinancialGroup.com. That's FloydFinancialGroup.com.
Back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your host, Randy Floyd.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money. And in this segment, we're going to be talking about bonds and have they lost their place in your portfolio, or just where are we in the scheme of this whole stock market and bond market?
And Randy, I just read that bonds are now positively correlated with stocks. First, can you explain what that means and why it raises concern for the stock bond portfolio?
Yeah, so let's go back in history and let's talk about, we probably need to go back to 1980. And people say, why in the world would you need to go back to 1980? Well, that was the last time that we had really high interest rates. And if we look back over our shoulder, we had 10-year Treasury bonds, which are basically where we give the government our money for 10 years. And they pay us an interest payment every 6 months. And then at the end of 10 years, they give our principal back to us. So, looking back over our shoulder there, if you had $1 million in a 10-year bond portfolio from the government, you'd have collected about 15%, so you're at $150,000 a year in income that you would have collected off there. So a lot of people thought that was a really great thing to do, and I think it was. Today, if we look at where we are with the 10-year Treasury bill, even though it's off of its low, we're at about 3.7, maybe 5%, 3.6, somewhere in that range. We've been as low as 0.53. So why do I tell you all this? What does this mean? So it used to be the retiree portfolio was a 60% stock, 40% bond portfolio. That was the old reliable portfolio. And here's what happened from 1980 through about August of 2020. While it was a jagged mountain range on the chart, on the graph, it was basically that interest rates went down since 1981. They just went down overall every year until they bottomed out in August of 2020. Now, what does that mean? When we look at bonds and what the value of a bond is, Jeff, if I have a bond that pays 10% and I want to sell it in an environment where the best paying bond I can buy pays 5%, is my 10% bond worth more or less than the current 5%? Well, the answer is it's worth more because it pays more money, right?
Right.
It pays more interest. So when interest rates are falling, that generally means that your bond is worth more than you paid. When interest rates are rising, that means that your bond is going to be worth less than you paid. This is kind of what's happened to some of the banks here of late, with the Fed funds rate going up from 0 in March of 2022 to 5% here in May and June of 23. That's what's put a lot of pressure on the banks, when they had to go liquidate fixed income to give people their money when they had a run on the bank at Silicon Valley and these different banks that had problems. That's part of what caused that issue out there. So all of a sudden, if we look back to 1980 through about 2020, that's 40 years of where bonds always were worth generally more than I paid for them. And when stocks had problems, people knew that their bond portfolios would be pushed up in value because they paid more interest than what they could currently buy. And so that always helped to kind of offset the ups and downs of the stock market, because your bond portfolio would kind of rally in there for you and prop you up. And then you knew on the other side of that after a while, after we had a little reset or a cycle or a business cycle, we knew that the stock market would come back around and be ready to run up again, and we would get the run up on the stock market side. So generally speaking, when stocks are falling, bonds are going up, and when bonds are going down, stocks are going up. Now you have to look at that from a couple of perspectives. One is it's the price of a bond or the yield of a bond. So the price of a bond, let's say I pay $100 for a 2% bond, and now interest rates are 5%. If I want to sell my bond because I need more than just my $2 interest per year, I'm going to have to discount my bond to make it yield close to what the rate is today, or nobody will buy it. So we're in this situation right now where with rising rates and them being quite a bit higher than where they've been over the past years, we have a different scenario than we have seen over the last 40 years looking back over our shoulder. So are bonds out of favor right now? Actually, if you don't own any bonds, now could be maybe a good time to buy some bonds. And you say, well, why would that be?
Yeah.
Many people think that Jerome Powell, our Fed chairman, is about to stop raising interest rates. Now, I'm not so sure that's true, but I will say this. He went from 0 to 5% in a year. And, he may have a little bit more to go, but the most of that is done. So if I buy bonds now and I feel that bond interest rates, that the Fed funds rate is going to go down looking forward, that would mean I'm going to have a higher paying bond than probably people are able to buy in the future, which means that I not only get my higher interest rate payment, but my bond is also worth more now because it pays more. This is the first time we've seen this really in any quantity since we had that last time from 1980 down through 2020.
So once again, when interest rates go up, bonds are worth less. When interest rates go down, bonds are worth more. That's a good reason for us to keep a good eye on interest rates. We're talking with Randy and Jake here at Floyd Financial Group. We're talking about bonds in your portfolio. Are there some other options besides bonds to consider for your portfolio if bonds are just confusing for you?
Yeah, I know that what I said there was a mouthful, and we kind of got off into the weeds there. But I often tell people, and when people come in to see us, I draw a teeter-totter up on the. We have a whiteboard in the conference room,
right?
And that kind of helps them to understand that relationship.
Yep.
So I would say this. Bonds in 2022 lost money just exactly. We're talking about correlation here.
Yeah.
Lost money just like the stock market, which has always been, as we just discussed 2 seconds ago, the opposite of that. So we had in 2022, bonds lost money, stocks lost money. Now we're sitting here, and with the Fed funds rate being as high as it is, it almost makes sense now to buy fixed products, fixed interest rates, because stock market is so volatile right now. Nobody really wants to be a part of it. That really just doesn't have to be. So are there alternatives? Yes, there are alternatives that you can buy out there that are safe. So let's talk about what those might be. So there are fixed instruments that have bonds as their underlying investment.
Okay.
That would be like insurance companies doing annuity contracts, potentially some life insurance companies on some whole life type products that might make sense at this point. But, beyond that, people don't think of it this way, but in reality, a CD is a type of bond. A money market is really a short-term type of bond. It's a loan. Those things are pretty attractive right now because they're in the 4% to 5% range. I even had a guy come in the other day and told me that he got a 7% 6-month CD from a credit union.
That's encouraging.
Which I thought was a mind blower, and I wouldn't want to keep too much money with that credit union.
I would imagine, too, that it was probably a smaller amount of money where they use it to attract clients.
$1,000, yeah.
Yeah, that's a pretty attractive rate. So there's many other things that you can put money into, but make no mistake, when we look at pension plans, when we look at bond portfolios, when we look at CDs, they are all tied to what the Federal Reserve Bank is charging for money right now that banks can borrow or investors can borrow, and that kind of sets the tone for what's going on. And, corporate rates are pretty decent right now. However, I don't know. I'd be very careful on what corporate bonds you buy. Definitely stay with investment grade. I'm not so sure that high-risk bonds or junk bonds, as they used to be called, are a really good place. They look attractive in some cases, but I'm not sure it's a good place to be long-term.
I would say, too, this is all stuff that we will explore in depth as far as what's right for each client when they come in for a consultation. We don't expect you to know what's necessarily best in these situations. As we have said before on this show, most people will only retire one time, and we retire multiple people every week. So, we've seen a lot, and we can help guide you into what makes the most sense for you. What we want to do is, just make sure that we maximize the chances of success success in retirement, and we will use any and all tools necessary to do that based on your individual needs and goals.
Yeah, and I think it's a very important point that you made there, Jake, is when people sit down with you, you're going to talk about the pros and cons of a lot of different products, but really it comes down to the individual, what their needs are, what their wants are, what their risk tolerance is. I mean, really, there are no two portfolios that are exactly alike.
No, that's for sure. Everybody's needs are different. Everybody's family dynamics are different. What they want to do in retirement, some people want to sit and drink coffee and watch the grass grow, and some people want to travel the world, or any combination thereof.
Right.
Everybody has their own goals and dreams for retirement, and what we want to do is build portfolios that meet them where they are, that fulfill their needs to the best of our ability.
That's right. And loyal listeners to this program know what Grandma Maggard said is that, everybody kind of knows, but they're all different. And it is the same way with these portfolios that you design. There's no right or wrong retirement. The right retirement is the retirement that you desire. If you'd like to come and sit down with Randy and Jake at Floyd Financial Group and talk about what the right retirement plan is for your particular circumstances, certainly you can do that by calling 417-889-7233. That call is going to get you a consultation with Randy and or Jake, or both of them, obviously, to find out who you are and for you to find out who Randy and Jake are and come to an agreement as to the right path to take for your retirement. Once again, 417-889-7233. And as always, there's no cost for this consultation whatsoever. There is no obligation. And most importantly, I think there is no judgment. Randy and Jake will meet you where you are. Once again, 417-889-7233. You can also request your plan online at FloydFinancialGroup.com. Time for a break, gentlemen. We'll be right back with the final portion of Show Me the Money right here on 104.1 FM KSGF, where Springfield comes to
This is Randy
talk.
Floyd, founder of Floyd Financial Group. If you're close to or in retirement and don't have a tax plan, get one. It could mean hundreds of thousands of dollars throughout your retirement. Our country's been spending like never before, and that tax bill is coming due. At Floyd Financial Group, we build tax strategies into retirement and investment plans designed to keep more of your gains. Take action. Call us at 417-889-7233 to schedule a retirement tax analysis today. That's 417-889-7233. After World War II, taxes reached 90% and were as high as 70% in the 80s. Don't be caught off guard. You can stop working and start living sooner than you might think. Call to schedule a virtual or in-person review. Our number is 417-889-7233. That's 417-889-7233. Or visit us online at FloydFinancialGroup.com.
Ready to climb a mountain of financial know-how? Good. Because it's time for more Show Me the Money with your financial Sherpa, Randy Floyd.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money. And to wrap up today, our final segment's going to be, and I get this question, and we all do, when is this market going to level out? When's it going to get normal and go back to something that is sane?
Yeah, define sane, I guess. Well, certainly we had sanity in the past as far as the market goes, and that's a pretty good question, Randy. So I'll ask you, when is the market going to return to normal or at least some state of sanity?
So here's what I would say about that, Jeff. There's a couple of things we need to realize is if we were to look back over our shoulder 25 years, was society running at a slower or faster pace then than now?
Yeah, 25 years, I think it was a little bit slower, certainly, or a lot.
And certainly before the cell phone, which would have been in the mid-'80s, right, we were definitely going at a slower pace. Do you remember the thing that you used to put on your belt called a pager?
Oh, yes, I had one of those. Beep, beep, you'd have to pull over, go into a phone booth, and make sure you had a quarter.
I remember the days when before I owned this business and was involved here, I was in outside sales, and I covered sometimes 900 miles in a day to cover some of my territory, right?
Yeah.
And so I remember I would call in at 10 for messages. I knew if I was okay at 10, I would be fine until 2. And then if I called in at 2, I knew I was done for the day. Now, let me ask you, would that work
those
today?
days, my friend.
Yeah, I had an answering machine where I had a little thing and you called in a number and you put up the little device and it made a funny noise and it would play your messages. Boy, those were the dinosaur days. And it had a cassette in it too. Yeah.
Oh, yeah.
I was actually thinking the other day about payphones and how the 25 cents for a call in the 80s was like highway robbery.
Yeah.
I mean, 25 cents was a lot of money back then as
Well, of
far
course.
from a phone call
It
standpoint.
was.
I mean, if you need to make several phone calls, I mean, you
So
know, you
I
better
got-
have a good salary.
I got my first cell phone in my car in 1991.
Yep,
I
yep.
think it's when I got it. It was through Alltel,
Yeah.
and it was $1 a minute.
Oh my gosh. Yeah. Yeah.
Yeah, is what it was to call.
How
And
bad do you really need to make that call?
So, I was in the food business, right? So serving restaurants and that sort of thing is what we did. I worked for a distributor. And so it really got me a lot of business, though, because everybody knew they could call me last minute and I could put their order in. And we used to put their order into this thing called a Telzon. And what you would do is you'd dial up a phone number and stick it on there to go, beep.
Yep. Yep.
Remember? And it would send people's orders through, but they knew they could call me last minute and get it added.
I think we need to make a video of you doing that noise and put it on the website just for everybody's enjoyment.
Anyway, yeah, I mean, how far have we come? Like you said, I mean, I had a car that had a phone that was built into it, and like you said, it was some horrendous price to make that. Now, a cell phone isn't just a way to make a phone call, but it's a way to communicate with the world. And I mean, technology is just incredible these days. But let's go back to the market, and the big question is, Randy, when is this market going to return to some semblance of what we think is normality?
So a couple things have to happen there, but I will say this. We will never go back to the days where it's a set it and forget it setup to invest. You just can't go there now. Everything happens too fast. When's the market going to straighten out? So Jerome Powell has his job to do, and he's trying to break the economy and turn this thing around and slow things down a little bit right now and get our arms back around our business as a country. I remember years ago, and I hate to go back to the food business again, but I remember that we were purchased, the company I worked for, by a little bitty concern called Kraft Foods.
Yeah.
And
Little one.
we were merging our companies together.
Right.
And in the middle of that, there was another division of Kraft Foods up in Kansas City that was in the caves in Kansas City. There's a whole network of warehouses and caves up there.
Right.
Well, they had a fire in the cave. I've never quite figured that one out. But anyway, they had a fire in the cave and it shut down that distribution point. And so we had to take on all of their distribution as well as what we had and cover basically about 3/4 of the state of Missouri out of Salem, Missouri, which is in the middle of nowhere. But I remember that all of a sudden we were thrown to the wind. We were operating 24 hours a day, 7 days a week, running extra crews. We were trying to do everything that we could to manage our business and get our arms around our business. And the problem was all this velocity and all of this new business, kind of like when we printed $6 trillion and put it into the system, sent people home and did all these things that we did to create this mess we're in. It took a while for us to right the ship and get our arms back around our business. And that's what's happening right now. And that's what Jerome Powell is trying to do, is slow things down, get people to take a breath and go, okay, let's start again here. And let's be productive people. Let's be positive people. Let's be solution-oriented. Let's not fight each other on every side and corner. Let's get back to creativity and positivity. When we can actually turn that corner, and I think we need a new president to do that probably,
Right.
I think we can make America great again.
And if we are waiting for things to return to normal, if I'm hearing you correctly, Randy, we'll never return to what we considered normal in the past. There's going to be a new normal. So what does this new normal really look like?
So faster trading, more volatile. I mean, we're already seeing this. One of the online trading companies, Robinhood, now is about to offer, or maybe they are offering by now. I know they talked about 5-day per week, 24-hour trading. It kind of reminds me of when we used to own a country store and we were open, 5.5 days a week. We were open Monday through Friday, a half a day Saturday, and we knew that Sunday we were off.
Right.
We were gone. We got our day of rest. Then all of a sudden, everybody started opening 7 days a week.
Yep.
Then all of a sudden, they're open 24 hours a day. Now, it's the same business. getting done, right?
Yeah.
It's just that everybody was trying to steal business by making it more convenient. And boys and girls, I think we've just about arrived to the point to where we don't have any more time to give. And so things are just going to continue to be fast. They're going to be faster moving than ever. And for people that are retiring, I'm not so sure that you want to be managing your money, because it's going to be a daily grind for you to feel like you're on top of doing that.
With the challenges, certainly, of managing your money as great as they are, I think what you just said is that for the average investor to do it themselves, it's just not possible these days. That's why it's so important to have a financial advisor such as yourself to guide this ship through these choppy waters.
I think it's possible, Jeff, but I think the average person, especially around here, doesn't really want to become an investment expert.
Right.
And, they want to go enjoy their retirement. I think it's possible for somebody to manage their own stuff.
Yeah, I agree.
But I just think one of the things that makes America great is you do what you do great, I do what I do great, and we hire each other when we're needing each other, and everybody flourishes. I don't want to be an HVAC expert. I want to call somebody to come and fix my air conditioner when it's broken.
Right.
I don't want to spend a year trying to figure out how to fix it, and then by the time I get it fixed, it's 100 degrees outside, So I think that's that's the essence of what makes America great. And that's why we devote the majority of our time, sometimes it feels like all of our time, to, the investment world, the investment business, where money is moving, what things are coming down the pike from a regulation standpoint, is so that we can really provide the most value possible to the people that come in our doors.
Yeah, that's exactly right. And I've heard this phrase, I was taught it, the highest and best use of your time. I mean, I do what I do well, but I could fix my lawnmower, but there's a guy around the corner who will fix that lawnmower for me. And, I'm supporting him, he's supporting me, we're supporting each other.
Right.
And that's what makes the world go round. We're talking with Randy and Jake Floyd of Floyd Financial Group. Randy, I want you to repeat that story. You're telling me about a fellow, I guess he would be the ultimate DIYer, but he was getting ready to retire, and he had bought himself a motorhome, I guess, and he and his wife were in your office to tell you about that motorhome. Can you repeat that story?
Yeah, he came in and he said, I got my motorhome purchased. We're all set up. We're getting ready to go on our trip. And he said, best of all, and this has been a few years ago, he said, I got a little dish on the side of there. So when I park, I can flip my dish out there, and I got internet, and I can manage my money. I got my computer right there. I can do it every day. And I looked at his wife, and she looked at me, and she says to him, then I'm not going. So I think that's case in point a little bit. I mean, not that people can't do it. I think that people are smart and intelligent, and if they want to study it, yes, they can do it. But I'm not sure that's retirement.
Yeah.
And managing your own money is very emotional.
Yeah.
And I think that's one of the things we try to provide, is to take the emotion out of investing assets. Even managing our own assets, it can become emotional. So I think taking the emotion out of it, you can make better decisions, especially when things are tough.
And that's the reason why doctors, don't operate on family members, because it's just too emotionally close. I mean, taking the emotion out of money, I think, helps clarify things a little bit, helps you make better financial decisions. And that's really what it's all about at Floyd Financial Group, is making the best financial decisions, irregardless, if that's a word, of the emotional aspect of things. And, that's where everybody is completely equal.
Yeah, so Jeff, everybody's money is important. We treat everybody the same here. Oftentimes we talk about that we can actually be more impactful for someone that maybe hasn't been as fortunate and as blessed to have a really huge portfolio. If I got a guy coming in here that's got $12 million, while I can, maybe make him some extra money and I can protect him on the downside, I'm not really going to change his life on a daily basis. But if I got somebody that's got 200, 300, 400, maybe 500,000, or maybe even less than that, there's some real impact that we can have to protect and grow and ensure their retirement success.
If you'd like to talk with Randy and Jake and be treated, like they would treat their brother, sister, mother, father, aunt, uncle, cousin, that sort of thing, get in and sit down with Randy and Jake of Floyd Financial Group and see how you can get yourself on a path to retirement in which you will not only survive, but you'll also thrive. Once again, the number to get your no-cost, no obligation, no judgment plan, 417-889-7233, 417-889-7233. You can also request your plan online at floydfinancialgroup.com. Gentlemen, we are out of time for this week. I want to thank you for your time, but most of all, I want to thank the fine people here at the Last Bastion of Sanity, Springfield, Missouri, for joining us. For Randy and Jake, I'm Jeff Shade. Get out and have a great weekend in this great part of the country that we live in. We'll talk to you again next week with another edition of Show Me the Money right here on 104.1 FM KSGF, where Springfield comes to talk. The information provided in the preceding program is for educational purposes only and are not intended as investment advice for any individual or entity. All information contained is herein believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The views presented today are those of Randy and Jake Floyd. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through Floyd Financial Group, LLC, an SEC-registered investment advisor.